Futures still positive, but losing a little bit of momentum. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, Trump's trade agenda dealt a major blow. A U.S. court deems most of President Trump's tariffs illegal. The White House says it will appeal. Global stocks are finding relief in the ruling, as well as Nvidia's upbeat earnings report that has reignited AI optimism. Plus, amid a flurry of retail results, a Buzzy deal emerges. E.l.f. is buying Hailey Bieber's beauty brand for $1 billion. I have no idea what that is.
Don't worry, we're going to talk about that in detail, but let's get back to Nvidia, because the godfather of AI delivered. Nvidia's strong forecast easing investors' fears about AI growth, but China chip restrictions still going to cost the company about $8 billion in the current quarter. You don't see that in the pre-market move right now, higher about 5.4% before the bell rings.
All right, so not exactly ripping face, but it is up. Retail earnings this morning. Kohl's affirms its full-year outlook after firing its CEO this quarter over conflict of interest. Best Buy cut its earnings forecast due to the tariffs and sees no major change in consumer behavior for the rest of the year. And E.l.f. surging, as I said, on its deal to buy Hailey Bieber's Rhode brand. Rhode?
Rhode, just Rhode.
Rhode brand. The CFO, Mandy Fields, joins us later this hour. Katie?
All right, let's get back to the actual top story today, and that is that a court has blocked many of President Donald Trump's tariffs on imports from dozens of countries, declaring them illegal. It's another example of the volatility we're seeing around trade policy, with some on Wall Street saying that Trump's tactics show he has more talk than action, calling it the taco trade. Trump always chickens out. He addressed this in the Oval Office yesterday.
Oh, isn't that nice? Chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number, and because I gave the European Union a 50% tax tariff, and they called up and they said, please, let's meet right now. We have an end date of July 9th. You call that chickening out?
So that was the president pushing back against that taco trade. And in regards to the court ruling last night, White House trade advisor Peter Navarro had this to say on Bloomberg just a few minutes ago.
There's no question that there's an economic emergency with respect to both uses that we had. One is we are in a world where China has killed over 1 million Americans with fentanyl poison, and we took this step to stop that. We will continue to press on that. At the same time, we invoked that rule to stop what has been 20 million illegal aliens streaming into our country, driving down wages, taking jobs away. That's an economic emergency. And on top of that, the world continues to steal about $1 trillion a year as measured by the trade deficit.
Let's get more details from Bloomberg White House senior reporter Josh Wingrove. And Josh, Navarro seems to be arguing the wrong point. As I understand it, these judges, one of whom was appointed by President Trump himself, the other was appointed by Ronald Reagan, didn't say that this isn't an emergency. They just said that even in that framework, these tariffs are an illegal reaction.
Yeah, I mean, Trump essentially used a shortcut in the views of these judges, and there was an Obama judge in there, too. There were 3 of them in that one, so let's not forget that one as well. But certainly the Trump judge there is going to dampen the criticisms, but we're still seeing them from the White House of this ruling. They're pledging they're going to appeal, and that they have appealed, and they're signaling that they're basically going to try to find other avenues. Now, the reason they were trying to use this avenue in the first place is it was, as I say, a shortcut. He could try to declare everything an emergency and apply these tariffs widely. And just to make clear what was affected by this, that's those country-by-country tariffs, including that sort of baseline 10% as well as that higher one on China, and separately those fentanyl tariffs, including the China 20% and those ones on Canada and Mexico, which have some exclusions. So all those are paused for now. And so we heard Navarro talk about other authorities. Section 122, that is a 150-day clock and a maximum of 15%, so it's a little more constricted than what they were trying to do previously. Section 232, they were already doing that on some things like auto, steel, and aluminum, with other things coming down the pipe like copper. They could try to pivot those or accelerate stuff that was already in the in motion there. And then he mentioned 301 as well. Of course, Section 301 is what they imposed a pretty wide range of China tariffs on already. So they might try to look to sort of go back to the well on that one. They have other tools. There's a reason they were using IEEPA in the first place. It was easier. They were sort of, out on the, let's say, the front edge of what the interpreted powers of that were. That's why there was a court case. But they might pivot. And forgive me for, we're here. It's Tariff Day and it's Lawn Maintenance Day here. So, we juggle many things here at the White House.
Seems like it was lawn day yesterday, too, as well. You got to put in a lot of work to keep that lawn that green. But, Josh, before we let you go, talk to us about how this might unfold from here. The Trump administration has come out and said that they're going to appeal this. Does this work its way to the Supreme Court?
That's a good question, and I think it's an open one, but I do not think that necessarily this case will be the be-all and end-all. They might look for stuff in the interim. One thing Navarro said there is that we might hear from the U.S. Trade Representative Jameson Greer shortly. Don't know what to say about that, but if you read into that, potentially there's some sort of interim bridge announcement that they're looking at. It's not clear, but the core message is everything the White House has said in the last 12 hours is that tariffs are coming one way or another.
There you have it. Josh, great to get the latest from you. That is Bloomberg's Josh Wingrove reporting from the White House lawn. Let's get back to Nvidia, though, because the company ramping up production of its Blackwell chip as the U.S. readies more curbs on chip exports. Now, last night, Nvidia CEO Jensen Huang joined Bloomberg to address concerns around China growth.
The Chinese competitors have evolved and advanced greatly over the last year. Like everybody else, they're doubling, quadrupling their capabilities every year, and the volume is increasing substantially. And remember, these are data center chips; they don't have to be small; they could be quite large. Without American technology, the availability of Chinese technology will fail the market.
Bloomberg Technology co-host Ed Ludlow conducted that interview, and I'm pleased to say he joins us now from San Francisco. So, Ed, talk to us a little bit about some of those concerns that Jensen Huang has over Chinese growth. I mean, it seemed like he was really appealing to the Trump administration here on their approach, but you're not seeing any of that concern in the stock this morning.
You're not seeing the concern in the stock because, frankly, just based on the outlook for the fiscal second quarter, $45 billion of sales, plus or minus 2%, taking into account $8 billion of lost revenue opportunity in China, Nvidia is making it up somewhere else. You alluded to the Blackwell ramp. And, when I asked Jensen about how they are managing that, he just said, yeah, look, I guess Blackwell is in so much demand elsewhere that China isn't an issue in the short term. But in the long term, it's a massive issue. And, Jensen wasn't alluding to or hinting at anything. He was giving a direct message to President Trump that technology export control policy is closing a door for Nvidia in the Chinese market, which is critically important.
Yeah, first of all, I listened to the interview live yesterday. Ed, great job. And I also loved the conversation with Ian King and your other guest. Before that, the thing about the interview to me is that Jensen Huang really sold me the idea of using Huawei chips. Like, if I'm an international company with a big China footprint, I'd rather build on that stack so that I can reliably maintain and upgrade my network. Why aren't more investors concerned about the fact that, we're holding ourselves out of that market and giving it essentially to Huawei or other Chinese competitors?
Well, the buoyancy of the stock in the here and now probably reflects investor sentiment that they feel Nvidia can make up the shortfall in sales somewhere else, as we explained. But you're absolutely right that the biggest point was Huawei. Jensen Huang didn't just say that Chinese companies shouldn't even bother with an American technology stack anymore. He acknowledged that Huawei has technology that is now not just on par with H20, which was the China-specific chip that Nvidia had engineered to a lower specification. Huawei has technology that is on par with H200, which until very recently was at the cutting edge of what Nvidia was offering. And again, it's incredible to hear the CEO of America's most important company say to China's technology companies, go with your domestic champion.
Yeah, fantastic points there, Ed. Great interview. Bloomberg Technologies' Ed Ludlow. You can check out the full interview on Bloomberg.com, and I'm sure you'll see a lot of it throughout this program and Bloomberg Tech next as well. Let's bring in Cantor Fitzgerald semiconductor research analyst C.J. Muse. And C.J., good morning. Thanks for joining us. Let me start with the same question. Jensen Huang was telling Ed yesterday that Chinese companies, it would really be prudent for them to use Huawei instead of trying to figure out a way to use Nvidia. And I would think also for bigger companies that have a big network and a footprint in China, they wouldn't want to deal with the geopolitical uncertainties of trying to use Nvidia chips.
Yeah, first, Matt, thank you for having me. I would say that, I think the first principle that Jensen's, thinking about is that, China is not going to give up on AI because of the U.S. embargo, which means that they need to go with internal solutions. And like, he said in the interview that you hosted, it's not just the silicon, it's software. It's also very large data center chips that SMIC can produce on 7 nanometers. So, I think he's absolutely right that this embargo is the wrong pursuit from the current administration. What they want to do is get the U.S. platform to be the global winner. And that, to me is the right, framework. And unfortunately, we're pursuing, a different path.
In the current geopolitical environment that we're in, I mean, we talk all the time about NVIDIA's incredible first mover advantage, that it really has this competitive moat, and it's enjoyed that. And you can see that in the stock over the past few years. Where we stand right now with the relationship with China, with these export curbs, does this accelerate how quickly that first mover advantage is whittled away here?
Yes and no. I think that if we didn't have this embargo, we wouldn't be talking about China catching up. Because it's not just the silicon, right? It's also CUDA, and it's all the kind of software stacks that fall in line with that. And it's not that NVIDIA is standing still either in terms of, recently launching Dynamo inference-based software accelerator. So they're clearly innovating. And so I don't think China has caught up. But I think what he's trying to highlight is the reality is that if we are not allowing NVIDIA to ship their silicon to China, then they're going to have to go elsewhere. And if we kind of look at NVIDIA today and, their R&D this calendar year is more than 50% of AMD's revenues, right? It's, I think almost, equal to the total revenues of Broadcom. And so, what we're doing is we're driving revenues, and Jensen talked about $50 billion revenue opportunity going down the drain. That's $50 billion going somewhere else where they can invest those dollars, they can drive scale, they can invest in software. And, looking out 5 years, yeah, they're going to be a credible, very credible threat.
All right, so having said that, then, CJ, what's the reason to be bullish here? I mean, especially with Nvidia close to its all-time high, which was almost 150 at the beginning of January. It's worth $3.3 trillion now. What's the incentive for an investor to get in at this point of the valuation?
Yeah, no, it's a great question. I'd say that we think we're on track to $5 of earnings this year. Street's at $4.36 coming in. We think next year they're going to earn $6.50 to $7. So if we're right, where the stock is trading right now, pre-market, it's about 21 times, which historically is very cheap. So number one, you have valuation support on my 26 numbers. Number two, we're just getting started with AI, and I think some of the announcements, and just in the last month, whether Oracle, XAI, Saudi Arabia, UAE, we have clear line of sight to tremendous growth, into 26. And as numbers push higher, you want to be there. And this is really one of the core names in all of semiconductors where I have confidence in real upside to consensus. I think point three, bigger picture, we're very early, in the overall kind of AI adoption curve, which is going to impact every facet of our lives. So I think it's still very early innings for AI. And I guess lastly, yeah, we have to acknowledge China competition, but at the same time, there are solutions that could work in terms of perhaps we allow data centers, in Malaysia or Singapore to support China. And that's a way to kind of get around this embargo. So I don't think the ship has completely sailed on China. I think Jensen is clearly making very bold statements that Washington, D.C. hopefully is listening to. And I do think there is, a solution that could, appease both parties.
Right. All right, CJ, got to leave it there. Great to get some time with you this morning. That is CJ Muse of Cantor Fitzgerald. And we do have some other stocks on our radar other than Nvidia, because Apple rising a little bit on a court ruling and a revamp to its operating system. You also have Tesla targeting a June 12th robo-taxi launch as Elon Musk prepares to step back from Doge. And Salesforce, Matt Miller, raised its sales outlook as AI bets pay off. This is Open Interest. Well, let's get back to that U.S. court ruling that many of President Trump's tariffs are legal. Pangea Policy founder Terry Haynes says that on a practical level, tariffs will continue unabated pending Trump's certain appeal of the CIT's summary judgment ruling. So nothing will change and tariffs will continue. Terry was also a congressional staff author of the 1988 Trade Act. I'm pleased to say that Terry joins us now. Great to have you with us. I want to go to the first line in the note that you published last night. Tariffs ruling versus Trump means nothing for markets. Walk us through that.
Basically, good morning, Katie. And basically, all I mean by that is that tariffs will continue until, say, the Supreme Court tells them to stop under this particular authority. Trump's going to push the limits. He wants the strongest possible presidency, and they'll continue with that. This Court of International Trade, which I wager most people didn't know existed yesterday, is basically a trial level court in the United States. So there's two levels of appeal before you go all the way up to the Supreme Court. And finally, I would say that the Court of International Trade exists as kind of a specialty court to adjudicate trade law disputes, but what it's not going to be particularly expert in is the limits of the president's emergency economic powers, or whether or not Congress could give the president those emergency economic powers under a 1977 law. So they're not going to get a lot of deference from certainly the appeals court and the Supreme Court.
Let me jump in here, because to me, regardless of that, this highlights how little support there is, and indeed how much opposition there is to Trump's tariff policies. You had a conservative trade group. It wasn't just Democratic states bringing this complaint. You've got seemingly a lack of support from Republicans in Congress who have legislation locked and loaded, ready to go, to give the president this broad authority, and they don't seem like they want to do it. And even if the CIT is a less significant court, there's a Trump appointee as one of the three judges and a Ronald Reagan appointee as one of the three judges. So, these are should be his guys, right? No one's behind this.
Well, I think I'll respectfully take the other side of that argument, Matt. Americans, I say Americans because you have a worldwide audience here. Americans are now very used to trial-level judges going off and throwing up injunctions at the drop of a hat on immigration policy and all kinds of other things here. So, the fact that yet more trial-level courts are doing this, I don't think indicates a level of support one way or the other. Number one. Number two, I'd counter by saying not only does the Congress been silent on this, and silence in this case is assent, but they're actually working to strengthen the president's powers. So again, I think those are more significant, frankly.
Well, that's where I wanted to go, to where Congress is in all of this. I was listening to a conversation with Wendy Striller and Tom Keene and Paul Sweeney this morning. That was one of the topics of conversation. Is this truly just between the Oval Office and the courts, or does Congress get involved at any point?
Well, Congress is, it's really about the extent of powers between the president and Congress, frankly. Congress gave, in 1977, gave any president this particular emergency authority. And the president is, the president will say and that he's exercising it responsibly. Certainly no one in Congress thinks he's exercising it irresponsibly, particularly on the Republican side. Otherwise, they'd be pitching a fit, and they haven't been. So you've got that, number one. And number two, you've got a tariff regime, which certainly Republicans are supporting generally right now, as long as it's followed by trade deals and a bunch of other things. And they'll continue to support that. And in fact, they're, as Matt points out, they're working to bolster that. So, you know, I don't see people in lockstep here, but that's Washington. I do see a Washington that is broadly aligned with what Trump is trying to do and how he's trying to do it.
Terry, great to get your take on this. Thanks so much for joining us this morning. Terry Haynes there is the founder of Pangea. This is Open Interest.
Welcome back to Open Interest. Here's the setup as we count down to the opening bell. You can see a rally underway in the pre-market. The S&P 500 up by 0.8%. Even more if you take a look at the NASDAQ 100. Nvidia being higher by 5%. Pre-market will do that for you. But it's interesting. The S&P 500, we were up much higher just a few hours ago. It seems like some of that enthusiasm is fading post that court ruling over the tariffs.
Yeah, I mean, if Nvidia rises 5%, that alone should add those points to the S&P, and that would mean everybody else is unchanged. So we'll see what kind of breadth we get at the open.
We certainly will. And we have a great guest to walk us through that. Of course, Saira Malik will be joining us at the open. Don't go anywhere. This is Bloomberg.
It is. Moments away from the start of trading, this is Bloomberg Open Interest on a pretty momentous day. It should be for markets after a court struck down Trump's tariffs and Nvidia came out with earnings. We are looking at gains on S&P futures, only about 0.9% now, so not huge gains. If you're mad bullish on Nvidia as already a $3.3 trillion stock, it should, I think, drive things further. NASDAQ futures up 1.4%. Russell futures up as well. On the New York Stock Exchange, you've got First Eagle Investments ringing the bell. They've launched a couple of ETFs.
Thank you.
One is a global ETF. One is an overseas ETF, which I think is really interesting. By the way, this company was founded in 1864 in Dresden.
Wow.
Yeah, it was the old Arnold and S. Bleischroeder.
Matt does his research for these.
And then on the NASDAQ, you have ISE, the International Securities Exchange, which was bought by the NASDAQ. They're not publicly traded, so it's really not as interesting, but I guess they have to do that.
You know what is publicly traded?
Yes.
And reported earnings yesterday. I'm talking about Nvidia. Its strong forecast really easing investors' fears about AI growth, but those Chinese chip restrictions will cost the company $8 billion in the current quarter. It's on the verge of becoming the world's most valuable company by market cap today. And you can see that shares are higher about 5% in the moments after the bell rings, Matt.
You may think that overshadows every other earnings report that's out. But retail earnings continue to roll in, and some of them are interesting, not just for the drama. Kohl's, for example, after firing its CEO, it affirmed its full-year outlook. And then Best Buy actually cut its earnings forecast. That related to tariffs, but it says it sees no major change in consumer behavior for the rest of the year. And then finally, e.l.f. Beauty is surging. This on a deal to buy, I guess, Justin Bieber's wife's makeup brand, apparently. I'm more interested in e.l.f. because they dropped off a package to my favorite sailor going from Oregon to Hawaii with his cat. The CFO of e.l.f., Mandy Fields, joins us later in this hour. So let's get back to Nvidia, shall we? The S&P 500's biggest stock mover by value this morning, and maybe soon to be the very biggest company in the entire world. Last night, Bloomberg Technology's Ed Ludlow spoke with the CEO, Jensen Huang, following the company's earnings results.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Let's get a closer look now at Nvidia with Bloomberg Technology co-host Caroline Hyde sitting to my left. And Caroline, how should we be thinking about this at a psychological level? Was this truly a knock the cover off the ball report, as Matt had been talking about in the days leading up to this, or was this simply just better than feared?
I think it's relief, but that relief puts it back in pole position. We are now the most valuable company on the S&P. They've eclipsed Microsoft if they hold these gains of in excess of 5%. We're back at $3.46 trillion because the China anxiety has been put to one side. Yes, they're going to take an $8 billion hit. That's a lot. But they're able to see the momentum of the Blackwell chips, the offering, the fact that they're actually managing to manufacture them at pace and get them into customers' hands. That outweighs the negative effect of not being able to ship the H20. In fact, Jensen did say, look, I'm still trying to think potentially of a future chip that we might be able to design, but would have to get sign off once again from Washington for China. That he's not giving up on the market. In fact, he's getting some flack, it seems, from certain lawmakers about building up some, well, at least office space in China at the moment. But he says, look, that's because I've got some, well, at least a spokesperson for the company says that's because the employees are coming back to the office.
Juan
now.
actually increased my own trade anxiety when he was talking to Ed Ludlow yesterday, pointing out that it would be prudent for a Chinese company to use Huawei or another Chinese-made chip. And in fact, even if the U.S. decides to allow the export of these chips, why wouldn't China say, as they've already advised, you can't buy Nvidia chips. You must buy them in our domestic market so we can grow this incredibly profitable business.
Look, he's learned from DeepSeek. That's why, of course, he's talking about the demand being off the chart for inference, because that was the anxiety that DeepSeek could come along and suddenly we don't need to train so much, but inference is where it's at. But he's also learning that, well, DeepSeek was purely formed because they didn't have access to really sophisticated chips. Now they're building their own. He's saying Huawei is doing amazing things. If you cut me off from this country, they will just develop and go it alone anyway. The AI diffusion rule, of course, he's really celebrating the fact that that's been curtailed and he's able to get his chips into other countries' hands. That's been a big win for the Middle East, for example. But I do think that there's this ultimate desire for access to China in the long term. But look at the news today on the chip design companies, Cadence, Synopsys. They're all they're going to take a hit because there's a concern that they're not going to be able to get their designs into China anymore. That's the latest restriction being put on U.S. to China. So,
and those students, those Chinese students, won't be coming over here.
Talent.
They'll study somewhere else, and then they'll go work for Huawei instead of for Jensen Huang.
Ed did ask him about that, and he said, look, overall, he thinks there is a focus on getting the right talent into America. But he's a guy from Taiwan.
Yeah, there you have it.
He demurred on that question, I think, a little bit. Caroline Hyde, looking forward to your program at 11 a.m. She is the co-host of Bloomberg Technology. Let's get to Nuveen, head of equities and CIO Saira Malik. She joins us now. And Saira, I'll just ask first, after really the biggest earnings report of the season, we've been waiting for months, it seems. Do you feel more bullish this market, so driven by, the AI hope?
I'm bullish on artificial intelligence. I think it's alive and well. With Nvidia, the two key factors that are positive for this stock are China and Blackwell. They've been big concerns. For China, what is a headwind is now a tailwind because of the $8 billion hit they took to China. And with Blackwell, the issues that people were worried about with the ramp have been resolved. So both of those are very positive. And we saw from first quarter earnings from other companies like Microsoft and from software companies that AI and demand there is very strong. So I don't think the AI trade is dead. I think Nvidia proved that. I think that's a fundamental positive for the markets going forward. Now, on the other side, I think tariffs are a short-term gain, but also still going to be a long-term pain for the market. So tariffs are a different story than the tech trade.
Well, it's funny. I mean, Nvidia absolutely the biggest earnings report of the season, but it feels like at least the mind share this morning has been taken by that court order basically blocking the Liberation Day tariffs that we got in April. And it seems like your uncertainty is the word of the morning, that this maybe is a short-term positive, but injects even more uncertainty into the trade process. Talk us through how you're thinking about this.
Well, short-term bump for the markets, but I don't think it will be long-lived because of that uncertainty around what will happen from here. It's actually less clear than what we had before the court blocked. So going forward, Trump can still put tariffs on China and raise those from where we are today. Second is Section 122 of the trade agreement, which allows up to 15% tariffs for up to 150 days. And third, of course, is appealing the court's decision and also what kind of permanent tariffs may occur going forward. So I think there's more uncertainty going forward around tariffs. The base case of 10% tariffs on the rest of the world hit GDP on our calculations by about 1.5%, which was not going to put us into a recession. We would just skirt a recession in that case. Now, of course, we need to think again, where will tariffs be from here going forward?
By the way, Sarah, we heard from Best Buy today that they don't really expect a change in consumer behavior. We haven't seen a lot of companies really pull their forecasts as we feared at the beginning of this earnings season. We don't get much higher inflation prints, at least so far. Did we have a little bit too much fear about these tariffs and their results going into this quarter? And do things look a little bit better than maybe you expected?
We haven't seen the impact of tariffs yet. That's going to take 3 or 4 months to run through the numbers. So markets did overreact around Liberation Day, around what they thought were going to be extreme tariffs. And then negotiations have pulled that number down a bit. And I think that's why markets have recovered. The driver of this economic cycle is the consumer, as you pointed out. And consumer data has been mixed. In first quarter earnings, we saw mixed numbers out of companies, mixed guidance. The good news is this week we saw strong consumer confidence numbers come out with a big bounce back up to 98. And tomorrow, PCE inflation data comes out, and it's likely to hit a 4-year low. So the hard data and the soft data for the economy has been strong. First quarter earnings growth came in at about double estimates, 12% growth year over year. So the economy is telling you everything's fine. The fear for the markets, of course, is what does it mean for the second half when those tariffs come into play? I still think they will come into play. What does that mean for markets? That's the calculation that needs to happen. But the good news is we're starting from a strong base with a strong economy and earnings growing low double digits.
Sarah, what do you think this means for the Fed? There was a really interesting note out from Neil Dutta over at Renaissance Macro this morning. He says, in his view, at the margin, this puts some pressure back on the Fed that maybe we should be emphasizing less near-term inflation data and putting more weight on employment. How are you viewing it?
The Fed has stated that they're going to view tariff-driven inflation as a one-time bump. We've consistently had an expectation at Nuveen for 2 Fed rate cuts this year. We're sticking to that starting later this summer. So I think all of that is going to be what the Fed is looking at. Now, the issue with employment is that employment markets tend to crack right about when a recession starts. So if the Fed waits for the employment markets to crack, they may actually fall behind the curve with their rate cuts. I think the Fed needs to be more preemptive and cut rates before they see a significant decline in the employment markets.
All right, Sarah, great to get some time with you. That is Nuveen's Sarah Malik. Let's get back to these markets right now and take a look at the breakdown of this rally because, boy, as you would expect it, we have a lot of names in the green today, more than 300 if you take a look at the S&P 500. And right at the top, you guessed it, it's Nvidia. This is the biggest gainer when it comes to a points basis, adding 22 points to the S&P 500 right now. But it's not just Nvidia. You also have Apple, Amazon, Microsoft, Tesla, Meta, Alphabet, all your big tech names really stepping up to the plate right now. On the downside, there are some losers that we have to talk about. Salesforce being there, down about 6%. You also have Netflix and Uber trading places for who is the second biggest loser in this market. And this setup is broadly what you're going to see if you take a look at the sector breakdown as well. We'll go there now, and there's more green than red, similar to what we saw at the stock level. You have consumer discretionary up there, but it's big tech that's leading the way. And just to highlight how much Nvidia is driving this market right now, if we click into what is the best performing in the name in the tech sector right now, it's Nvidia up at the top, now up 6%, Matt Miller.
You mentioned Trading Places.
Yeah.
Have you seen that pivotal film?
Do you think I have?
I don't think you have.
I haven't. Sure, it's great.
All right, I think you should definitely watch it this weekend. Coming up next, e.l.f. Beauty buys Hailey Bieber's beauty brand, Rhode, for $1 billion. I'll figure out a way to explain that. When we come back, we're going to talk to Mandy Fields, the CFO of e.l.f. Beauty, about that deal and how she's dealing with trade uncertainty next. This is Open Interest. All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up,
Salesforce getting downgraded at RBC Capital Markets. The analyst cites execution risk in the company's acquisition of Informatica and also questions whether it was necessary to own the company instead of just partnering with it. Shares down about 6%. Next up, we have Southwest getting upgraded to a buy over at Deutsche Bank. The firm says that the airline's refreshed board of directors will usher in a new era of change, which should drive higher shareholder returns. And finally, we have Starbucks downgraded over at TD Cowen. The analyst flags the risk of slowing sales thanks to deteriorating value perceptions and increased competition. Meanwhile, Wall Street also taking a shine to a buzzy new deal. E.l.f. Beauty announcing it will buy Hailey Bieber's Rhode brand for $1 billion. Now, this move gives the cosmetics retailer access to a product line that has become hugely popular among Gen Z and millennials. As a result, you have Raymond James, Deutsche Bank, and Jefferies, just some of the firms that are raising their price targets on E.l.f. following this news. And I'm pleased to say that here with us now is the company's CFO, Mandy Fields. Mandy, it's great to have you with us. Talk to us a little bit about why this deal makes sense and why now specifically.
Well, thank you so much for having me. We are so excited to welcome Rhode into the E.l.f. Beauty family of brands. We found a like-minded disruptor. I mean, if you think of what Hailey has done, built a business from zero to $212 million in 3 years on 10 products online. It's just incredible. And she did it profitably. And so we saw this business and just the kindred spirits of disruption and community, her ability to attract so many people into this brand, we had to bring it into the family.
It's interesting. I mean, you think about the experience with Kylie Jenner. I mean, she sold her beauty brand, I believe, to Coty, and then eventually brought it back. I mean, the fact that you're partnering with a celebrity founder here, did that add any additional levels of due diligence into the thought process?
Well, we spent a lot of time with Hailey and the team. I've talked with Hailey about kids, about, family activities. I mean, she is just so down to earth. And we really don't see her as a celebrity. Stable. A real founder with great instincts, a great aesthetic, and we're very excited to partner with her.
I can't imagine anyone more stable than Hailey Bieber and Justin.
God.
They just live such a normal life, Mandy. I want to ask about the exposure that you have to China, especially considering what we saw yesterday out of this court. I mean, how much uncertainty is there surrounding trade for you and your job?
Well, the tariff situation is one of the main reasons why we did not provide guidance on our call yesterday. There's just such a wide range of outcomes when it pertains to tariffs. And so until we have more certainty on that front, we're just going to wait and see what happens.
Yeah, and it's interesting. According to our Bloomberg intelligence analysts, your exposure to China is pretty high, about 75% of your cost of goods sold. And how do you handle that? I mean, do you try to move manufacturing to other countries? We know that hasn't exactly worked out well for some other industries. Or do you try to move it back to the United States? How do you even start to blueprint that?
Well, we have a tariff playbook, and it really consists of 3 things. 1, pricing, 2, supply chain optimization, and then business diversification. And we've made progress across all 3 of those things.
I want to ask about your marketing. You've done some work with Catherine Lega in NASCAR that I've noticed, and now this sailor guy on Instagram who's going from Oregon to Hawaii, he has millions of followers. You dropped a care package off to him, which I thought was just brilliant. How do you come up with these ideas? How much do you save on marketing? Because that's not, some $1 million drop. You just rent a plane and give him some snacks.
That's right.
How much is a drive? How much of a drive are these things to your bottom line?
Well, it keeps E.l.f. at the top of the conversation, and our marketing team moves at the speed of culture. And so they are so in tune with what's happening in the community. I have to tell you, I did not know about Oliver's journey before we did that drop, and now I am all in on it.
All in. I have not been following this.
I'm all in. This guy quit his corporate job. He had a 9-to-5 that he hated, cashed out his 401k, bought a boat, and now he's sailing around the world alone. Well, with his cat.
With his cat, yeah. I don't know. I don't know if I love that the cat is on the open ocean. But Mandy, let's get back to your brand a little bit more. And I want to talk a little bit about how you acquire new customers, especially you think of beauty trends. They change so quickly. As I mentioned in the intro, I mean, Rhode is very, very popular, particularly among Gen Z. Unfortunately, I spend a lot of time on TikTok, and I can see that very viscerally. When you think about, again, the logic for buying Rhode at this point in time, was it really about trying to reach those younger consumers?
Well, as you know, E.l.f. also is very popular with Gen Z. And so, again, just like-minded disruption and that connection with community that is so important. You know, you look at Rhode and you see some of the pop-ups that they've had. People are waiting 14 hours in line to get access to this brand, to be a part of this lifestyle. And it's just really incredible. It's similar to what E.l.f. has done. I mean, we are so close to our community. A lot of our innovation is inspired by our community. And so both of us coming together really have an opportunity to be very community focused and disrupt this industry.
Mandy, we were talking a couple of days ago with Stefan Tanda from Aptar. They make packaging and dispensing products for the beauty and health care sector, maybe for you guys as well. But one of the things that he said was a reduction in airline travel is difficult for them because you sell fewer of your goods at, you know, duty free, and airports are a great place to buy that kind of product. Have you seen that as well?
You know, we're not available in duty free, but we continue to see demand for our brands. I mean, we grew our market share 190 basis points in this last year, and that has continued into our latest quarter. And we continue to see consumers asking for E.l.f.
All right, Mandy, great to have you on the program. Thanks so much for joining us. Mandy Fields there of E.l.f. Beauty, talking about her their acquisition of Rhode, Hailey Bieber's beauty line, and also some pretty cool marketing tactics. Let's get to some retail movers on our radar this morning, 20 minutes into the session. Kohl's affirming its full-year outlook after firing its CEO this quarter. We talked about that quite a bit.
Yeah.
Very interesting story.
It's very interesting, both what's going on in their C-suite. They're still looking for a new leader. They have an interim CEO in Michael Bender right now, but
maybe better due diligence this time.
Yeah, but it's interesting. I mean, you compare it together with what we heard from Macy's yesterday, and maybe it's not all bad for retail right now.
Yeah, exactly. Foot Locker sales missed estimates, but it's awaiting approval for its merger with Dick's Sporting Goods, so I guess the earnings are not as important to this stock. And Best Buy cut its earnings forecast due to tariffs, but you know, I read through some of the statement, some of the release, and they don't really have concerns about tariffs moving higher. They don't have concerns about the consumer reacting negatively. It didn't seem that bad. Nonetheless, the reaction is bad.
That's the thing. I mean, I hear what they're saying, that they see no major change in consumer behavior, but it feels like if you wanted to blame it on something, you could have just pointed to that. But Best Buy not taking that route. You can see shares down about 7.4%. This is Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check on stocks at this hour. It's really a sea of green here. The S&P up 0.7%, and we've seen almost all of the big tech stocks rally. The NASDAQ up 0.8%. The only red chiclet that I have behind me is the VIX, and obviously, if the VIX is down, that's good for stocks. So, in terms of the biggest movers, Nvidia now a $3.5 trillion stock, adding 5%. Microsoft is not down. The same is true of Apple and Alphabet. Tesla's up 2.4%. Dan Ives says it's great that Elon Musk is quitting Doge and is going to work at the car maker full time. And Amazon up 1.5%, 1.33%. So, Katie, it looks like we're seeing some solid gains, but not really blowing the roof off.
No, not exactly. I mean, you take a look at trading volume. It is much higher than it has been. We'll continue to track that. But coming up in the next hour, we're going to head to the Goldman Sachs Leveraged Finance Conference in California, joined by Sonali Basak. That's coming up next. This is Open Interest.
We are 30 minutes into the trading day. You can see that we still have gains on the board here. 0.6%, 0.7%.
Not bad.
They're not huge.
Not huge. You know, we've really seen that enthusiasm in the pre-market just fade and fade as we get deeper into this Thursday. I will note that volume right now 22% higher than the 30-day average. So people are active on both sides right now.
Check out type ECO Go.
I will do that.
Look at pending home sales.
Are they bad?
Much worse than expected.
Yeah.
Down 6.3% month over month, down 3.5% the non-seasonally adjusted year over year.
Well, mortgage rates are still quite high. We're going to get into that. And we also have a lot to get to. We have to talk, of course, about tariffs. Blocked for now. A U.S. court deems most of President Donald Trump's levies as illegal. The White House says it will appeal.
The AI boom continues. Nvidia calms investors' fears over a China slowdown with a solid sales forecast.
Well, we got a whole bunch of engines firing right now. The demand is just off the charts. You see the popularity of all these AI services now?
Off the charts. We're also going to get some insight into the intense competition among low-cost airlines. JetBlue founder David Neeleman, he's now the CEO of Breeze Airways. He joins us later this hour.
And now we're going to go live to Sonali Basak. She's at the Goldman Sachs Leveraged Finance Conference in Dana Point, California. Took the red eye out there and up and at 'em bright and early. Sonali, what have you got going on?
Matt, thank you so very much. It's a good day to talk about risk appetite. There are, from what I hear, about 450 different issuers and investors here to talk about exactly what's going on. And with me right now, I have Goldman Sachs' Christina Minnis, who is the global head of acquisition finance, and Vivek Bantwal, who is the co-head of private credit at Goldman Sachs. A lot going on in both of these worlds. Looking forward to kind of discussing how you see it from different angles. Christina, risk appetite, though. I think that's where we have to start here. There is a lot of push-pull when it comes to the administration, their tariff policies. Of course, that big news overnight about the court blocking the use of IEEPA. How are your clients thinking about risk-taking at a time when the macro is still so uncertain?
Well, delighted to be here. Vivek and I, back 10 years ago, we were together, actually not on this patio, but it's been 10 years of working together, so thanks for having us on the show. And we're delighted to be at our conference, having all these issuers here. And I would say, in terms of risk appetite, I'd say things are pretty measured, but we're starting to see real green shoots of activity. And we see companies really starting to think about, again, how to deploy capital. And from an investor perspective, we've seen some really interesting developments in the markets where larger transactions now are being discussed. And when I say larger, $15 to $18 billion transactions are being discussed. So that's a very good sign for risk appetite.
It's interesting because you have the syndicated loan markets and then you have private credit. I would imagine from a private credit perspective, that type of pent-up activity could be exciting. But what would cause it to materialize?
Yeah, listen, I think that some of that is driven by M&A activity, and so M&A activity will sort of ebb and flow with the macro. I think we all expect sort of M&A volumes to pick up when you think about the sort of age of portfolio companies in the private equity community. And so as they start to monetize those positions, that's going to lead to more M&A, and that'll lead to opportunities for both public markets and private markets and credit.
At what point do people start to get worried about credit deterioration a little more? Things have been pretty complacent, as Jamie Dimon had recently warned. Do you think that the markets are still too complacent? And do you worry that things have to kind of widen out from here before people get more comfortable with taking on some risk?
I think there's a lot of credit dispersion, right? And so certain sectors are very resilient. And so what we see in our credit committee is focusing on which sectors are really exposed potential to some of the macro. And there are a number of sectors that are pretty resilient. And I think what I've seen recently in projections that we've seen from clients is that people have done a pretty good job of dealing with what perceives the perception of higher costs. So I think, at this point, defaults haven't really ticked up, but we're watching it very closely.
What are those places that are immune?
Well, tech, for example, has had, some great, resilience. Software, of course. Some sectors within healthcare services have been very resilient. And then some of the distribution business. And then, of course, businesses that are potentially not as exposed to tariffs have seen some real resilience. So there's an openness right now, I think, to deploy capital. And from an investing perspective, we see that with our financial sponsors as well.
So if we had this conversation, say, 3 years ago, Christina, how many times have I peppered you about the private credit industry saying, are they in competition with the Goldman's core business? Now, Goldman has made a big push into private credit in a bigger way. When do clients turn to the private credit business versus syndicated loan markets? How do you think about how those businesses work together?
Yeah, look, we have a very, very close partnership. We've been in the private credit business a long time. We started our private credit business about 30 years ago, and it was really started as sort of a partnership between our kind of asset management business, where I currently sit, and with our leveraged finance business. And so because we have such a big presence in both public markets and private markets, it puts us in a position that whether it's people in my business or in Christina's business, when we're talking to borrowers, we can show them the full menu of options, public and private, and we can really solve for them. You know, think about their use case, think about their objectives, and tailor a solution to them. And so whether that's public or private, we have strong capabilities in both, and we want to really just do what's right for them.
But what are our clients choosing ultimately? Because it matters from a supply perspective, doesn't it? If clients want to go private, then it keeps the supply in those syndicated markets tighter, doesn't it?
Yeah, I think the use cases are very specific. So when we present an opportunity set to our clients, we say we can go with a broadly syndicated solution in the loan market, the high yield market, and we have a solution with our partners in asset and wealth management. And one of the reasons we formed the Capital Solutions Group was because we're trying to marry the #1 investment banking franchise with one of the top alternative asset managers to provide these solutions. And so I'll just give you an example. Let's say you're looking at a company that really wants to have a significant amount of delayed draw powder, to make acquisitions. In the syndicated markets, you get basically charged for that. And in the private credit market is actually quite constructive around that one feature. Sometimes clients don't want to get a credit rating. And in the private credit market, you don't need a private credit rating. So there are very specific use cases, and what we see is clients switching back and forth very nimbly. We just did a very successful financial services transaction out of the private credit market into the BSL market with a syndicated second lien that was anchored by the direct lenders that had played the unitranche for that company a year ago. So it's all converging, and that's why we've always been very constructive. These markets are going to coexist. The private credit market now in the U.S. is almost $1 trillion. The U.S. and high yield loan markets are $1.3 trillion each, respectively. These are large markets.
So what does this mean for private credit in terms of the macro also? Because you have the benefit of floating rate when it comes to private credit. You have a lot of investors saying it's a golden moment. You were one of them a few months ago. You said this is the golden opportunity for credit. But for private credit in particular, how do you balance the risk and reward? Because investors are equally looking to see what the cracks are under the surface.
Yeah, look, I think that, to Christina's point, private credit in general tends to be focused on the more stable industries. So it's software, it's services, it's kind of more stable businesses. But I think private credit starts with good underwriting. You need to get the underwriting right, and you need to take a long-term perspective. And one of the benefits of private credit is that you're making this investment, and you're planning to hold it for the 7 years until maturity, or if it gets refinanced earlier, it gets refinanced earlier. But that's really the framework around private credit.
So, higher for longer environment. We were all kind of taking a look and seeing if interest rate probabilities had changed for the rest of the years in terms of what the Fed might do in terms of cuts. Back in April, the market was pricing in as much as 4 rate cuts. Now it's 2 or less. What do you think? I mean, if the rates are going to stay higher, then how is it that companies don't come under more pressure when it comes to refinancing right now?
So look, I think higher for longer is the theme. I was actually looking back 10 years ago. The 10-year was at 1.75%, or 4.4 this morning. So it's amazing how the world has changed. And the cost of an LBO back then was just over 6%, and now on average it's in the mid-8s. So it's a couple hundred basis points higher, which means obviously the cost of capital is higher, which puts a bit of a governor on the amount of debt. So the quantum of debt's a little bit lower. It's about a turn lower than it used to be. And so I think companies just have to be much more nimble and very thoughtful about how they manage their businesses, whether it's their CapEx plans or working capital. And yes, probably not taking that last quarter half turn of leverage and thinking through putting a little bit more equity in.
It's keeping the belt a little tighter these days. Yep. So from where you're sitting as well in the private credit markets, one big theme that we're seeing is companies that are coming under pressure from higher rates, whether it's refinancing or whether it's private equity-backed companies that just haven't been able to exit. Rescue financings. Are you interested in diving into some of the things that might be appearing, and how big is that opportunity?
Yeah, it's a good question. So, when people talk about private credit, they're often talking about direct lending. But private credit is much broader than that. And so for us, in addition to our direct lending business, we have a hybrid capital business. We also have a private investment grade business we haven't talked about yet. But in our hybrid capital business, we are more opportunistic. We are able to kind of lend more junior in the capital structure, lend to good companies that, to your point about sponsored DPI, if it's a private equity firm that's been in the asset for a long period of time and their exit's been delayed, maybe because the IPO market hasn't sort of been available to them just yet, we can provide capital to help them, kind of extend the runway and, kind of continue to grow their business so they get to the scale that they need to get to an exit.
Sounds like you are interested. Calling card to private equity firms. That is Vivek Bantwal of Goldman Sachs and Christina Minnis, of course, kicking off our coverage here today at the Goldman Sachs Annual Leverage Finance Conference. Guys, back to you.
Sonali, thanks very much. Sonali Basak there. She's going to be back shortly for a conversation on the future of payments with the CEO of MoneyGram. This is Open Interest. Let's get to high interest, a look at what's making headlines around the world. Secretary of State Marco Rubio says the U.S. will start aggressively revoking visas for Chinese students. In a statement, he wrote that students affected would include those with connections to the Chinese Communist Party or studying in critical fields. Chinese officials are condemning the decision, saying it will harm relations. China had the second most students in the U.S. of any country last year, behind India. Chevron is planning to lay off nearly 800 employees in the Permian Basin, its biggest oil production operation. Earlier this year, the company announced plans to reduce its global workforce by as much as 20% by the end of 2026. The CEO, Mike Wirth, says he's trying to make the company more efficient and better able to withstand low oil prices. And LVMH's deputy CEO says Chinese customers have been pulling back on travel, on consumer spending, indicating that a slump in luxury goods has some room to run. The comments come after Bloomberg reported the luxury leader has been warning of softening demand. In the first quarter, LVMH's revenue in the China region fell 11%. It's unclear when U.S. demand will recover in light of ongoing tariff uncertainty. According to the CEO, LVMH will no longer increase prices in its wines and spirits divisions because, quote, we cannot increase prices indefinitely. But they can, and they will. Prices only go up over time. Anyway, let's take a look at stocks. They also, if you look at the bigger picture, Katie, they only go up, right?
True.
The S&P 500 gaining a third of 1%, now at 59.08. It doesn't feel like we're going up that much. The NASDAQ gaining a third of 1%, almost, and the 10-year yield coming down to 4.45. It doesn't seem that incredible, does it?
Yeah, in the grand fullness of time, I will say stocks only go up, but there's a lot of volatility for years in certain periods. Let's take a look under the hood, though, and talk about some single stocks. Nvidia, higher in a big way, up 4% still after delivering an upbeat sales forecast. It actually passed Microsoft to become the most valuable company in the world, and it really has the whole market on its back right now. Nvidia adding about 16 points to the S&P 500 right now, which is only up about 21 points. You also have Apple rising a little bit on a court ruling and a revamp to its operating system. And then you have Tesla higher as well, targeting a June 12th robotaxi launch. You also have Elon Musk preparing to step back from Doge. Shares up a little bit right now. But let's head back to the Goldman Sachs Leverage Finance Conference in California, where Sonali Basak is joined by the CEO of MoneyGram. Take it away.
Katie, appreciate it. I'm with Anthony Suhu, who is the CEO of MoneyGram. Just over 6 months into the job. What a time to take over for you.
Yeah, it's been exciting. Thank you.
To say the least, I'm sure. Now, your business is very international. And of course, when it comes to these tariffs, how do your clients see the push-pull of what's happening? Do they look at what's happening overnight and see it as a much-needed pause or just a lot more uncertainty?
I think there's a lot more uncertainties in the markets, but one of the things I would say for the core consumer that's interesting is that over 70% of our business is actually outside the U.S. And so when we look at that, one of the things we have noticed is the global worker is very resilient. And so as we're going through this process, what we find is that workers are moving around to make sure that they work in the best places to send money back home. And then the other thing is global remittance or global payments is really a need, not a want. So as a result, I think that we still are trying to learn what the impact really will be for our business.
You know, it's interesting. There have been some fairly drastic currency movements around the world, but also here in the United States.
Yep.
What has that meant for you in terms of the people who are sending money overseas? Has it changed behavior at all?
Going back to the point that it's more, global payments is much more of a need versus a want. What we're seeing is amounts are actually pretty stable. What it definitely means is the amount that goes back into the hands of the consumer might be less. And so we're monitoring the situation very closely, and we hope that we learn a little bit more about it, and then we can figure out the best way to serve our customers.
So to the extent that there are cracks in the consumer right now, where are you seeing them the most?
I think what we're seeing is a little bit in travel. In terms of how consumers travel and where they're going to, they're definitely taking a little bit more shorter trips. And then outside of that, what we're seeing is that they are going to areas where there's actually great exchange rates from where they're going. And so, both things that make common sense to the individual, where you're going to go, where your purchasing power is the best. And that's what we've noticed.
So as a CEO who's trying to navigate this tariff strategy, how do you navigate it? Have you created a playbook here to get through what the next few months might look like?
Well, I think it's a little like the pandemic in some respects, where we're creating our playbooks right now on the fly, because a lot of the movements in terms of the amount and size of some of these tariffs are meaningful. And so we're monitoring with our team. We're having daily discussions about how to do best. And always, I think the anchor for us is to focus on the consumer, which allows us to be able to make sure that we're anchored on the right things versus trying to make any short-term gains.
Yeah, you're navigating this on a lot of fronts. You're navigating this from a consumer perspective. You're navigating it from international business perspective. It's interesting. I've heard you talk a lot about how a lot of your clients are also immigrant populations. How are they behaving right now, given the administration's stance on immigration? Do you see a change in the way they're interacting on MoneyGram?
What we notice is that a great thing about having a global payments network like we do, just as a backdrop, is we service customers in over 200 countries, 20,000 corridors, with over 450,000 retail locations and 5 billion digital endpoints. What we find about our customers is that they have a tendency to be very resilient. So as one area might be a little bit less welcoming, they're moving other places to work. So they are actually going to where the work is. We've seen huge movements in terms of the Middle East, for instance. I was just in Dubai recently. I think the population there's over 90% of that population that is actually immigrants or not. And it's exciting to see where the pockets are. And so in our network, what we find is if something goes down in one area, they get picked up elsewhere.
Fascinating. I want to talk a little bit more about MoneyGram itself, though, beyond what your clients are doing, because you have a lot of big plans yourself. You've talked about the desire to go public again. What does that timeline look like?
Well, I would say it wouldn't be this year, but I joined the company a little over 6 months ago, as was mentioned. And our goal is to take MoneyGram, which was a great company at one time that was public, I was taken private, and actually go through a modernization and the digital transformation. And our goal would be hopefully, over the next few years, to take the company back public and take it much more as a digital first, customer focused, modern company in the global payment space. And I think there's going to be a lot more use cases of how people think about MoneyGram and use it.
How quickly do you feel like you need to pivot to the world of crypto also? Because you are seeing that stablecoin bill making big strides in Congress. Do you feel like you need to embrace it in a much bigger way? Do you think that that's the future of payments?
Well, we certainly are embracing it in a big way. We actually think the Genius Act is a huge unlock for stablecoin. And when we think about our business, actually, we think about it from a B2B2C perspective. What we mean by that is stablecoins can make huge impacts for us in terms of how we think about running global treasury, the movement of actually money. In addition, it's going to allow real-time settlements. And it's actually going to make our supply chain of movement of money much more efficient. And then for our consumers, what that means is we're going to put a lot more money into their pockets, because our goal would be to lower fees to drive higher volume.
Anthony, we'll have to pick it up again soon, of course. Things are changing under the surface. That is Anthony Su, who, as we said, just about over 6 months into the job as the CEO of MoneyGram.
All right, Sonali, thanks very much. Sonali Basak there with the CEO of MoneyGram. And still ahead, Sonali is going to be sitting down with the Goldman Sachs Vice Chair, Robert Kaplan. That's at 11:30 a.m. New York time. This is Open Interest. Let's get a check on what's going on in stocks. I'm looking at the move screen, which I think is the most dynamic way to look at these markets. And Katie, I don't know if you made this point earlier.
Yeah.
You made it to me. I don't remember if you made it on air.
I did.
We're only up 16 points on the S&P 500 right now, 17 points. And 14 of that is Nvidia. So I'll just make it again, just driving that point home, because Nvidia is carrying this entire market, right? No other stock is adding more than 2 points. And you're looking at Salesforce taking that away. So it's pretty much unchanged without the gain of that $3.5 trillion company after earnings yesterday. In terms of the sectors moving, we do see real estate moving higher. We do see healthcare moving higher. So a little bit of a defensive play, although Staples is doing a whole lot of nothing right now. Communication services, which are those hyperscalers, are actually down right now. And that's a big heavy weight on this market, Katie. So we're not really off to the races as you may have thought we would be looking at futures earlier this morning.
Yeah, and it's interesting to see tech only up less than 1%. It was up 1.6% when I did that sector check an hour ago. So those gains fading. But coming up, we're going to be speaking about summer travel. We'll talk to David Neeleman. He is the CEO of Breeze Airways. This is Open Interest. Well, to put it mildly, tariff confusion has created an uncertain economic environment for consumers this year. And heading into the summer travel season, airlines have been reporting a dramatic drop in demand for domestic leisure travel. Joining us to help gauge the summer ahead for aviation, I'm pleased to say we're joined by David Neeleman. He is the CEO of Breeze Airways. And really, if you take a look back at the past earnings season, the story there was that you had major airlines either pull guidance or offer multiple scenarios. So take us in to your vantage point. When you take a look at the next few months, what's the outlook there?
You know, from our standpoint, things are pretty good. You know, I just keep looking at the bookings every day and looking at our summer season. And, you know, I think our people have done such a great job of selecting routes. About 87% of our routes, we have no nonstop competition. So during these times where things get a little tighter, people are a little more concerned. You know, maybe they look a little harder for a lower fare, but they also look for a flight where you have the convenience of going nonstop as opposed to going through a hub. So, you know, we're really cautiously optimistic for the summer, and if we aren't public, but if we had guidance, we'd be holding it firm from what we would have given at the first of the year. So, you know, there is a little softness, but it's being offset by fuel. So we're in really good shape.
Yeah, the fares seem relatively low to me. I was just booking a flight from Islip to Norfolk, Virginia, and I chose the nicest option, and it's only $200 round trip. Is that enough to make you profitable, or are you still posting lower fares to compete and take share?
You know, it covers our expenses. You know, we're not wildly profitable. We expect to be profitable for the second quarter. You know, it could always be higher. We're seeing more softness on the transcon when you look at those transcon fares, but we've gone kind of shorter and shorter. So routes like Islip to Norfolk are just our bread and butter. Relatively short flight. We'll take your couple $100 all day long. That works for us. And what we find is when our guests fly us, they take a look at the nicer, and the nicest, and they aspire to be in the nicest. So as opposed to other ULCCs where people try and figure out how to pay less, our people actually pay up. And you know, our average revenue per flight is about the same as Spirit's, and we have 100 less seats. So, you know, it's a much better model for the environment that we're in.
Yeah, it's a really interesting model. And I'm taking a look at some of your stats. It looks like you added 29 new cities in 2024. You now operate more than 275 nonstop routes. So what does the future look like? Are you looking to add more routes here? Are you looking to add more cities?
Absolutely. We're up to 72 cities now, 32 states. Like you said, probably 280 routes. There's just so much, we have just this great airplane. It's an Airbus A220. They're brand new. But what's really key is the trip cost, what it costs us to fly from A to B. And we are in routes where it's really hard to make it to fly with an airplane that has 240 seats on it. And that's why you see these ULCCs moving more into, they have overlap of maybe 85%. And we're just the opposite. And so that's where you get yourself into trouble when things get soft, because the big guys have incremental seats that they can price at really low prices. And so it's better to be kind of in your own thing, doing your own thing. And we've got like at least 1,200 routes we've identified that we can fly. So there's at least about 300 airplanes worth of demand in kind of the market where we thrive in.
Well, and you keep expanding your fleet. I think it's 50% year over year. You mentioned that Airbus A220 made, I guess, finished in Toulouse in France. When you buy that, do you fly it to London or Madrid, and then it's used before you bring it back in the U.S. so you can avoid the tariffs?
Actually, it's made in Alabama. Our planes are all made in Mobile,
Alabama. I've actually been to that plant. Amazing. That's so cool. So there aren't any tariff issues.
There are a little bit. Ironically, a plane made in Mirabel in Montreal still falls under the ULCC, the USMCA, which is the U.S. Canada-Mexico trade agreement, where the parts in Mobile are right now being tariffed, like the wings a little bit. So there's a little bit of tariff on it. But Airbus was smart. They have 2,000 people working in Mobile. They're looking at taking that to 3,000. And so they have a lot of leverage. But I think what's really important about this whole tariff situation is the U.S. is a huge exporter of aviation. We have a 6-to-1 ratio. We exported $124 billion worth of product, and we only imported $20 billion. So we're kind of China in reverse when it comes to aviation. The worst thing that could you possibly do for America is to tariff aviation, because it can only hurt us when you have that much of a surplus. So I've spent a lot of time in Washington, D.C., talking to a lot of the officials, saying, along with other industry people, saying, don't be stupid here. This is we have a great, between Pratt & Whitney and GE and Boeing and Honeywell and Collins and all of these great companies, we export so much more than we import. So hands off on aviation, because since 1970, there's been kind of 1979, there's been a truce on aviation where nothing is tariffed, and that should continue. Absolutely.
So, David, you began service in May 2021. My understanding is that you only fly Airbus planes. Correct me if I'm wrong. Why Airbus versus Boeing? Take us into that initial decision.
Well, we do have a few Embraers that we started with, and we're kind of phasing them out by next year that have been great. But the reason we picked the Airbus A220 is, as I mentioned earlier, is because of trip cost. When we fly between point A and point B, we can do it about 25 to 30% less than an airplane that has 240 seats on it. You can say, well, their cost per seat is actually cheaper than your cost per seat. I'm saying absolutely. But if you can't fill the airplane, I'm much better off. So if I have a 25% advantage, I can be making a 15% margin if we're flying the same number of people, and you're losing 10%. And so we can fly in markets. Huntsville, Alabama is one of our great cities. We fly Huntsville, Alabama to Las Vegas, or we fly it to LAX, or we fly it to Tampa or Orlando. But before we came along, you'd have to go through a hub. And so great northern Alabama city, growing, thriving. The Carolinas, North and South Carolina, are the two most in-migration states in the country. A lot of flights in and out of the Carolinas to places in the Northeast, Western New York, where you've had these migration patterns where people can go back and forth between Rochester and Greenville, South Carolina. I mean, who would think that that would be a market? But a lot of people in Rochester moved to Greenville, and they're going back and forth. So, there's just huge areas where it makes a lot of sense to have these nonstop flights, but you need an airplane that has a lower trip cost. Not a regional jet that's inefficient because it's a what we call a scope airplane, because of it's forced to be a smaller size, but something right in the middle that really nobody else is taking advantage of.
David, one of your old airlines, JetBlue, doing a deal with United today where they get to kind of trade slots a little bit, and they have access to Newark. You also fly. Breeze flies a couple of flights out of Newark. Is that really safe? I mean, in my mind, like, if the radar sometimes goes out for a couple of minutes, that's totally not cool. And I really wouldn't want to fly out of Newark if that's a possibility, like it's happened multiple times in the last month. What would you tell a consumer?
Yeah, it's 1,000% safe. That safety is not the issue. We have backup systems upon backup systems. That's not a problem. The challenge with flying out of Newark is when the FAA puts a ground stop or a ground delay program, and the flights are all running late. That's the challenge. We do have a couple of flights. We fly to West Virginia out of there on a deal we have with the state. But yeah, we kind of avoid congested airports for that very reason. In the New York area, we fly Islip, we fly Stewart, we fly White Plains, we kind of fly around it. And not only do you have airports where you don't have those ATC delays, but you also have a lower cost airport. If you were to just do Newark, particularly LaGuardia, there's $50 you have to pay in a facility charge on top of your ticket. So that's if you're trying to stimulate traffic and stimulate demand and stay away from ATC delays, those are places that we don't really want to fly to. There's plenty of demand in Stewart and White Plains and Islip and other secondary airports in New Jersey and other places.
I will say I flew into Newark on Saturday coming from Rome, and I'm here to talk about it. So there you have it. David, fantastic to get some time with you. Really appreciate it. That is David Neeleman. He is the CEO of Breeze Airways. Now coming up, Nvidia gains moderating a little bit. We'll discuss with Nancy Tengler. She is the CEO and CIO of Laffer Tengler. We'll get her thoughts on Nvidia and everything else. This is Open Interest.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Nvidia CEO Jensen Huang there speaking with Bloomberg's Ed Ludlow after the company reported results that beat expectations. Joining us now is Nancy Tengler. She is the CEO and CIO of Laffer Tengler. And Nancy, we love having you on because you talk about individual stocks that you invest in or maybe don't for some reason. I wonder in this case about Nvidia because Jensen Huang in that interview yesterday with Ed Ludlow really sold me on the idea of I'd rather use Huawei chips because I have a big global footprint, a lot going on in China. I don't want to deal with the geopolitical uncertainty around Nvidia. Why be bullish on this stock?
Yeah, I mean, that is the concern, Matt, and thanks so much for having me. I think the administration needs to think about the bigger picture. And Jensen makes the right point, which is the platform that wins in China wins globally. And yet the backlog for the Blackwell chip far exceeds demand. I think the backlog's about a year. And you've now got, the Middle East coming to the table. He's going to Europe, making commitments. So it's likely that they will be able to replace the lost revenues from China. But they took a $4.5 billion charge on the H20. And that chip was only developed for China. I mean, it was modified for China. And now so it has no market. And the question is, will the administration make the pivot? And my guess is they probably will.
I can't imagine how frustrating this situation is for Jensen Huang. And it sounds like what you're saying, though, Nancy, is that the demand that we see for Blackwell is enough to offset maybe the revenue that they're losing when it comes to China. How do you approach this as an investor? I mean, would you add here, or is this a stock that you would just hold at this point?
Well, so Katie, we were adding around tariff turmoil. So we added right before Liberation Day, and then we added again after, and we're pretty happy with those transactions or those investments. They've appreciated dramatically. I wouldn't necessarily chase it here, but if you look at it, if you don't own it and you look at it on a valuation basis, it's only trading in the mid-20s, but generating, the revenue growth was that even with the charge was 69%, or with the embargo, it would have been 79% if the China tariff embargo was not in place. So the growth is strong. The price earnings to growth ratio is modest in comparison to other tech names that we hold and like Tesla, Amazon even. So I think you can own this for a very long period of time because they will make the pivot. He is a savvy CEO. He's maintaining his relationships with the Trump administration while going out and drumming up new business. So I think the company's going to be just fine, but I am worried about our sort of protectionist leanings at the moment.
Yeah, it's odd for usually Republicans are free traders. When I was a kid, Republicans, Ronald Reagan was a free trader. Let me ask about the court move to strike down these tariffs. Arguably, a more niche court, the Court of International Trade here in New York, but still has the same power as any other trial court. A lot of the companies, Goldman Sachs, Evercore ISI, commenting about it today say, maybe this is okay for the short term, but longer term, it just gives us more uncertainty, and it's not fantastic because Trump's going to put the tariffs on another way. How do you feel about it?
Yeah, I agree 100%. I mean, look, we were swimming along just fine after, the pivot on April 9th or April 8th, whatever it was. And then he announced the 50% tariffs on the EU and a 25% tariff on Apple on iPhones. So I think we have to expect this kind of volatility at least through the first half of the year. And then I think the administration is going to get very serious about looking forward to the midterms. And this kind of volatility, I've heard it said that, well, Main Street doesn't care about the stock market. Well, 62% of Americans own stocks, and mostly via their 401k. So I think they will make the move. The OBA, we call it the OBUBA bill, the one big beautiful bill, will eventually get signed into place, and we will continue to see deregulation around the edges. That will be helpful if we get clarity on the 100% expensing. That will also help CapEx. Because remember, the hyperscalers, are going to spend about $350 billion this year in CapEx for AI, and that's up 41% year over year.
Yeah, it seems like the consensus that is emerging is that basically this court order is going to turn up the volume when it comes to trade noise. But Nancy, one of the reasons I love talking to you is because you have a high conviction portfolio. You have a collection of your 12 best ideas. That cohort is up 4.8% this year through yesterday. You compare that to the S&P 500 up a pedestrian 1.2%. You're outperforming. So what currently is your best idea on the best ideas list?
Oh, good question.
Thank you.
I would actually say that, we own some of the usual suspects. We've talked a lot about Broadcom, the poor man's Nvidia. That's a member. It was also a member of our 5 for 25 prediction. But I think Amazon from here is probably the best performing stock in the portfolio is Spotify. And we've liked that for a long time. We've owned it for a long time. We still own it. We just trimmed it recently. But I think you want to own Amazon in here and just continue to pick away at it because, Andy Jassy said something very insightful. He said currently 15% of cloud computing is in the cloud. Of computing is in the cloud, and 85% is on-prem. And I think, and he said in the next 10 years, you're going to see that flipped. That's a huge growth trajectory for all the hyperscalers. And I think he's an excellent CEO and has been navigating the waters pretty well.
Yeah, that was a crazy, my Prem is just not prepared, Nancy. So I think a lot of us have to think about that. Nancy, always great to have you on. Thanks so much for joining us. Nancy Tengler there of Laffer Tengler. Coming up, Trump advisors are downplaying the implications of a court ruling that blocked the president's tariffs. We'll hear from Peter Navarro next, obviously a big supporter of that strategy. And Balance of Power co-host Kaylee Lines is going to join us at the desk here at 731 Lexington Avenue. We are excited to have her.
We think we have a strong case, yes. We will immediately appeal and try to stay the ruling. But at the same time, the court, interestingly enough, basically said we were right, just used different rules and laws. So nothing has really changed here in that sense. We're still, as we speak, having countries call us and tell us they want a deal.
And that was White House trade advisor Peter Navarro speaking earlier this morning to Bloomberg Television, responding to that court ruling that blocked really a broad swath of President Trump's tariffs, Liberation Day tariffs, if you will. Joining us at the desk to discuss is Balance of Power co-host Hailey Bieber, again, not in D.C., in New York City. First of all, great to see you.
Likewise.
Second, let's talk about this, because it seems like, again, listening to Peter Navarro, this administration is going to appeal this.
Yeah, they already have. This very well could end up with the Supreme Court. So by no means does this ruling say this is the end-all be-all of these reciprocal tariffs or the tariffs placed on countries like Canada, Mexico, China in regards to the fentanyl trade or questions of the border. But what the court has said here is the president did not, in fact, have the emergency authority to invoke IEPA, the Emergency Economic Powers Act, in the implementation of these tariffs. Yes, as Peter Navarro was alluding to, he can do with specific other authorities enact tariffs on sectors as he has, like steel and aluminum, or autos, looking at Section 232 authority, which takes into account national security concerns. There are other mechanisms as well. For example, you could pursue an investigation into unfair trade practices through Section 301. So it's not to say the administration has no power to invoke these levies. He just can't use the broad scope of authority that he intended to when he announced these. The other thing I would mention as well is that he has this authority because Congress granted it to him through this act back in the 70s. Congress does have a role to play as well in the imposition of levies technically, so that is another area with which the administration could turn.
Yeah, I wanted to actually go there because I feel like there's just not a lot of support for these tariffs, even on the Republican side of the aisle. They have, as I understand it, legislation ready to go that would grant the president much broader authority to impose tariffs, and they don't seem excited to push it through, right? They could have put tariffs in this one big, beautiful bill, and it would have been much better for scoring, and yet they did not do it.
Well, yeah, there's Congressional Budget Office calculation reasons that go into that. But to your point, Matt, it's not just about legislation that could grant the president the authority. There has also been legislation introduced on a bipartisan basis, including from Republican senators like Chuck Grassley, that would actually reclaim some of that authority for Congress, saying Congress needs to approve whatever the president has set out. It hasn't necessarily gone anywhere. You can't necessarily get a vote on that in the House in particular. But you do make an excellent point that the other thing to consider here is the administration was bringing in billions of dollars in revenue because these tariffs existed. This was supposed to help with the math problem of the big, beautiful bill. Even if you couldn't score it that way, it was still more revenue that was intended to go in the Treasury's coffers. The administration argued hundreds of billions of dollars a year and would help offset some of his tax cuts. Right. He said the bond market was wrong to look at just the tax bill, that they needed to include tariffs as well. But obviously that tariff policy is now running into a bit of a legal issue.
Well, Hailey, you have a busy day ahead of you talking exactly about this topic.
Indeed.
Why are you guys up here? I saw Joe,
I just wanted to come see you guys.
I get
That's
it.
so
I
kind
get
of
it.
you. We're very happy.
Dealer, you can catch Hailey Lines on Balance of Power at 1 p.m. and then again at 5 p.m. A quick check on these markets. The S&P 500 still up about 0.5%, but you compare that to our pre-market gain of about 1.5% on the big benchmark. Some of that enthusiasm fading right now, Matt.
Yeah, it does feel like it's waning a bit. On the other hand, we're seeing yields come down. So that's great news, I think, for this equity market and for these United States of America. We got Mike Wilson on tomorrow, as well as Mira Pandit. Don't miss it.